Hello again, welcome to another of our market update videos. I think the last time we filmed one of these videos, it was towards the end of May, and we were enjoying some lovely spring sunshine then. And I think it's fair to say there was still a bit of heat in the property market back then as well. But typically I sit here in early July and it's gone quite a bit cooler. And what about the property market? Since then we've had yet another base rate rise from the Bank of England, interest rates now at 5%. We had a whopping 0.5% increase as the Bank of England seemed desperate to get that inflation we hear so much about under control. So what impact has it had on the property market? Have we reached that tipping point yet? Well, before we give you our view on the outlook for the property market ahead, let's just take a quick look back at the month of June. June was a month which took us by surprise, really. The number of sales agreed in the month was very similar to what we saw 12 months ago, when we were, of course, still in the last throes of that post-pandemic property market boom. And we're not just looking at data from our business here, we're looking at whole of market data from across our region. So it backs up what we've said about this phenomenally resilient property market that we've talked about in recent videos. And I think it's also evidenced by some of the pretty robust price data we've seen as well. Average asking price of new listings in June was $245,000 compared to $235,000 12 months ago. And the average price of properties that sold subject to contract in June was $218,000 compared to $215,000 12 months ago. So a small increase in the last 12 months, and in many ways it still feels like a bit of a normal market right now. However, with the latest interest rate rise and the mortgage rates rising again off the back of that, have we now reached that tipping point in the market? So at the end of our last video, we said that if interest rates rose much further, we might start to see a significant cooling in the level of demand for property. Clearly, there's quite a lot of uncertainty out there at the moment, and whilst I've just talked about some pretty robust data in terms of number of properties sold and prices holding up, I think we are now starting to see at the coalface in estate agencies' offices across our region some signs that this uncertainty is starting to pull on the market now. We now have double the volume of properties available for sale, which is giving buyers far more choice than they had, say, 12 months ago. And this means buyers can be far more cautious. And what we're now starting to see is a volume of price reductions doubling on what we saw 12 months ago. Now that's not entirely surprising, as 12 months ago we were still in that boom period when pretty much everything was selling and few sellers needed to reduce their asking price. But we're now seeing more motivated sellers than we've seen for a long time reduce their asking prices in an effort to tempt buyers. And I think the key question for us is, are these price reductions we're now starting to see more of, is it just taking the froth off the market, or are these price reductions going to start to translate into real house price falls? I think you could compare things right now to a set of scales. On one hand, you've got your sellers. On the other hand, you've got your buyers. And which way are the scales going to tip? And I think the key question for us is, what's going to happen to mortgage rates? So far, the economy and property market seem to have absorbed to a large degree the interest rate rises, and most people seem to have just accepted the era of higher mortgage rates that we're now firmly in. However, I'm not sure the market can, certainly in terms of price rises, withstand much more in the way of interest rate rises. We're currently at an interest rate of 5%, and I think if we get towards 6%, that's going to create some real additional pressure on those who need a mortgage to buy, pressure on those whose fixed term deals are coming to an end and need to remortgage. So we're at a real tipping point, and I think if rates rise much further, then the scales start to tip in favour of the buyers. However, if rates start to stabilise, maybe even start to come back down next year, then we might find things start to get a little bit more favourable again for sellers. Of course, you'll have to stay in touch with us through these videos to see which way the market goes. If you've managed to get this far, I really appreciate it, and I'd really appreciate it even more if you feel like you've got some value from this video. You could hit that like button Of course, if you're thinking of moving in 2023, we'd love to talk to you. We're here 8 till 8, 7 days a week. Thanks for watching.